Good morning, good afternoon, good evening. This is Kirk Newcomb with Ravine Capital Partners here. Today, I have Jordan Rose, good friend and managing partner of Ravine Capital. Jordan and I have gotten to know each other through the search process. He is currently also looking to own and operate a business. And we have talked a lot about process as we've gotten to know each other and how to be great partners as business buyers. But we thought that we would spend some time today to talk a little bit about our experience and our views as buyers and the process that we tend to observe so that anybody who's looking to sell their business is in a great place to say, understand the process and perhaps hopefully better prepared for what's coming. So what I'd love to do is turn it over to Jordan. Perhaps you can introduce yourself a little bit and sort of maybe why you're well qualified to talk about it.
Well, thanks, Kirk. I appreciate you having me on here. I know you've put up a few of these with some other like-minded individuals, which has been fun to watch, and I've learned a thing or two doing that. So as Kirk said, I'm the managing partner of Ravine Capital, and I've been searching for a business to purchase and then operate for a little over 2 years now. I think, Kirk, you and I, a little bit of the same timeline here. Just a quick, by way of background, I spent a lot of my time prior to Ravine in the sales, marketing, technology, and software realms. I think the common denominator is working with firms as big as Bank of America, MetLife, Ford Motor, and as small as, fast-growing startups around how you build the right brands, reach the right customers, and develop the right products, services, and experiences. So I've always, been sort of growth oriented, and that's where my brain sort of goes. But I love trying to figure out how you build the right businesses. And I think for me, though, when I was in business school, and I graduated almost 7 years ago at this point, seemingly a long time, being surrounded by folks who are really motivated in my own class to start companies, run businesses, work with great teams, that rubbed off on me. I knew I wanted to point my ship in that direction. For me, I decided to go the consulting route straight out of business school, and it took me some time to really arrive in this world. But I knew once I started Ravine and sort of built my own team up that this is where I wanted to be. And I'm really, one thing that we'll talk about a little bit is working with an owner, someone who's really considering what their exit options may or may not be. That's actually one of the more exciting parts of what we get to do on a day in and day out basis. No one story is the same. It doesn't matter what industry you're in, doesn't matter if two companies look exactly the same. Owners who are typically the founders and also the CEOs, they each have their own story to tell. And if they're considering where they may go from an exit perspective or an exit path, one is never the same as the other. So one of the challenges or opportunities, I guess, is us to really work closely with an owner and be collaborative around, hey, as buyers, we're interested to purchase your business. As a seller, you're potentially interested in selling and exiting your business. Like, how do we talk to one another and also make sure the process is efficient and clear and we're each trading the right information so that we can ultimately say, hey, this is worth putting an offer in front of you and really committing a lot of our time, effort, energy to getting the deal done. So I'll stop there. As I tell folks on the phone, if I don't stop, I'll go on for another hour. So I'm excited to talk a little bit more on process because, as you said, we're we're process nerds. So
I love it, and I think, and we have to be ultimately because, and we'll probably talk about this is just that being mindful of people's time is absolutely paramount. And it's because ours is valuable too, and we don't want to drag anybody into a process that isn't going to be in their best interest. And I think that a lot of that boils down to us genuinely wanting to be good partners, but our reputation is also of utmost importance, and we want to do right by folks at any point in the process.
Yep.
So I think that to kind of shape how our conversation is going to unfold today for anybody who's listening, we sort of decided that we would kind of walk through what it looks like from call number one, an initial discovery call with someone, through to the letter of intent, an LOI, and sort of the steps in between, but also some of the data points that we're looking to collect and that you should collect as well. The questions we're happy to answer and likely to ask. Ultimately how you can be better prepared for each step as we go through. I guess also, Jordan, you and I had sort of prepared some key assumptions for this discussion. And I think that might be helpful for you to kind of outline a few of the things that you're thinking about, because every situation is different and we just want to set the landscape here. Can you walk us through that?
Yeah. And I wrote some stuff down here on my handy printout, so I might be referring back to that. But most processes, if you want to describe it as such, a conversation between a buyer and a seller, tend to sort of follow some buckets or steps, which is what we're going to discuss. But I think, as you said, the assumptions are just going to be helpful to hem us in a little bit. So I think the first one is, let's assume the owner of the business, the seller, and the buyer, you and me and other folks, we've at least had one touch point introductory call, maybe an in-person meeting. We've gotten to know each other at least at a basic level, and there's interest to kind of keep the conversation going a little bit here. So I think that's one. The second is, as the buyers, we are going to assume that the sellers are willing to share proprietary information about the business. So we have assumed that there's an NDA in place. As you have probably experienced, some sellers I've worked with are happy to tell me all about their company without an NDA, but for 90% of the time, you have the document in place, and that's just to make sure that everything's kept above board, and we're not going to go around sharing trade secrets with someone else, as you can imagine. And the third is, we're going to assume that the seller is a serious seller, and this is a term that you and I have heard a lot throughout our sort of search process, but I think it's important to emphasize here. I think as a business owner, if someone is coming to you and saying, hey, I want to buy your business, assume that they're a serious buyer, that they're prepared to buy tomorrow, the next day, a week from now, whatever the right time frame ought to be. And they're committing their time, effort, and energy to be really thoughtful with you, to be really honest with you, but also to really try to understand your business inside and out and your own motivation. So we as buyers also expect that from sellers, that you're serious about considering the idea of selling the business, that you're willing to, work with us and trying to trade the right information back with one another, and have this be collaborative. That's not to say folks can't change their mind. That happens all the time, and we get that on both sides. And as long as it's in good faith, no harm, no foul. What is frustrating, and I'm sure this is the same for a business owner, is as a buyer, to spend a lot of time with someone who never was really serious about selling. Maybe they were just looking for some sort of, general, hey, how much is my business worth? If that's where you are, just tell us up front, right? Yeah. We'll save a whole bunch of time and we'll tell you exactly what you need. But anyway, for the assumptions here, you've met each other, you're willing to trade info, and you're a serious seller. And then I think from there, we can go off to the races.
I love it. And I think that to piggyback, I would say that I'm always open to those conversations when somebody says, listen, now's not the time, but I think probably a year from now, I'm going to be ready. It opens a discussion for other stuff. And that's maybe an opportunity to just share how we think about it and the valuation or the process. And also to maybe push a little bit and say, if you're looking to sell in a year, you probably need to start thinking about that 6 months in advance of when you actually want to close, because it takes time, and we can have those conversations. But in either case, that's not an assumption. That's more just observations of kind of how things go.
Yeah, just really briefly on that. I'm the same way, like getting to meet people and understand where they are at any point in the process, even if they're not prepared or looking to sell today. That's totally fine. I think there's a lot of value to discussing, hey, what questions can we answer for you as someone who is a buyer? And it's so much of this is about relationship building, right? This is not just a transaction. This is building a meaningful relationship. So let's try to do that early and often. And if it takes some more time, then, take 6 months, 12 months, 18 months, that's okay. So just wanted to, piggyback off that a little bit.
I love it. Transitioning to kind of phase one of our conversation, we've talked a little bit about these initial conversations. Do you want to go sort of from there and walk us forward towards the sort of the IOI stage, the indication of interest stage, or do you want to go straight to IOI and really walk through that step? How do you want to think about that?
I guess we can sort of lay out how we get to an IOI and why that's important and what does that even mean exactly. So in this world, acronyms are used all the time, I think, because we're just so used to them in shorthand and in any sort of industry. So I think basically where we're starting from, right, is, hey, we have two folks, a buyer and a seller, who would like to better understand if there, what I say is there a there, right? Is there some level of interest on both sides and some level of excitement to really say, can we play the tape forward and get us to a real offer, which is the LOI, the letter of intent. We'll get there in a second. Let's start with the IOI though. So what an IOI is an indication of interest. It can come in a whole bunch of different forms, but basically it helps set expectations early in the discussion around price. One of the questions that we as buyers will get even within 10 minutes of our first phone call is, okay, how much are you willing to pay for a business or my business?
My favorite
question.
question.
That's a little bit of a loaded question, right? What I'm not in the business, what I don't like doing is just shooting from the hip and telling folks, some general, hey, here's how much I've seen other businesses go for. But I think it is really important, and I'm a big believer of this, Kirk, you can weigh in as well, that we as buyers owe sellers some expectation of valuation or price as early as possible, right? So coming from a sales background, I did software sales right before I started this searching process. If you don't talk about price early, 99.9% of the time, the deal will end in a lot of frustration, not really tears, but I'll use tears. If it's not something if it's not something that you're comfortable discussing early, or at least gathering the right information to set expectations early, you're just kicking the can down the road, and it's usually in a more painful way. So what the IOI does is just lay those out, saying, hey, based on a limited set of assumptions and data, and what I know about your business in the industry and what you as a seller are looking to achieve, here is what I think I'd be willing to pay for the business, or a range, right? It could be plus or minus 5, 10%.
Or more.
But I think it's key to communicate that it's going to be based on a limited set of data, because you're not asking for everything right up front. There's enough that you can work with to sort of build that. Let me pause there. I didn't know if you wanted to chime in or not.
Yeah, I think I was just chiming in and saying, I think in a range, like you said 5 or 10%. I think unfortunately, like, you don't always have perfect data, to your point. And so 5 or 10% would be nice. I think sometimes it's more. And so I just want to be mindful about expectations there. I also, as a preface to this, like, an IOI it's a letter, right? Like I will write a 2-page IOI that includes information, and it feels formal, and it's because it is. We're very serious about the offer. I also have had very candid conversations that don't involve an IOI, and that came down to, I think, me having conviction about the business, understanding it well enough, and the industry, but also the seller themselves, the owner, also having strong conviction. And we just got right to the point, right? And we knew that it was valuable to us to get this out of the way and have that conversation. But I don't want to detract from sort of what you want to share on the IOI front. So I'll step back.
No, I'm with you. I think that the IOI can take different forms. I think the spirit of it, the ultimate objective, is to set price expectations early. Mm-hmm. And that can be, I'm the same way, right? I have a templated document ready to go that has the key sort of points around sort of, hey, what's the general sort of price we'd be willing to pay based on limited info, maybe some ideas around the structure of the deal. I think let's come back at that later. I've also called people up after, them sending me the financials and saying, hey, you wanted to know, like, here's what I think about it. I think having something written down ultimately helps with just having something more on the record. So I tend to either follow up with an email or have it in that letter form. It can take various forms. I think the letter is pretty common, this 2-page Word document, Kirk, that you mentioned. So I think, how does a buyer, we always have to remember who's the seller and who's the buyer. We're the buyer.
We're the buyer.
How does a buyer get to an IOI? I think you really need one, ideally 2 pieces of information, which is why having the NDA in place is super important. One is historical financials. Ideally, that's about 3 years of data. So we're It's March 5th, 2021. So we're going to say 2018, 19, 20. Most folks are on a calendar year as a fiscal year. I know some folks are on different ones, but at least 3 years of fiscal data. We're talking about P&Ls or income statements. A lot of folks we work with have this all run through QuickBooks. Just, pull that file down and just forward it over to us, right? We are very well versed in making heads and tails of the data in there, or we'll be able to ask you follow-up questions. I've seen folks send me work from their accountants, their CPAs, and some folks send tax returns. Whatever you're comfortable with, but very often it's an Excel pull from QuickBooks or a similar accounting platform. That is for probably the most critical piece of data. So we can we can see the growth story, the margin profile of the business, general, again, profitability, it starts to paint a bit of a fuller picture outside of some of the conversations we've had. I'd say the second one that I think is really helpful, if it's available, is getting a better sense of customer level sales data, even if it's for 1 year. And the names of the customers can all be scrubbed. I think it's just for us to better understand, is this a business that sells to 1,000 customers and it's very well spread out across 1,000 customers? Are there 10 customers? Are there 100 customers, but that one customer makes up 50% of your revenue? I think having just a better grasp of that, particularly with technology or software oriented businesses, I think as the buyer, if we are going to step into the business after purchasing it and really running it, having a sense of, hey, who are the customers we really need to take care of, or who comes and goes, that is really helpful, and I think does help shape how we can build a valuation or a range out in the IOI itself. Some sellers are not prepared to share that because they kind of want to understand price before talking about customers, which I get. But again, if I'm talking about my ideal scenario, I would typically ask for that. So yeah, I think that gets me started and allows me again to at least build out, hey, we think your business is worth, or we'd be prepared to pay between X and Y. Here's the relative assumptions we've seen. And then it gets the conversation going. I think what you want to try to accomplish coming out of having the actual IOI in front of a seller is to say, is this interesting to you? And if it is, let's talk about why. I think if it's not, well, let's talk about why. I think we just want to have an honest and candid conversation, knowing that we're all trying to do this in good faith. Assume that the buyer can defend or explain everything about what went into the IOI. And I think on our side, we hope that a seller will tell us why an IOI is resonating with them or not resonating with them. It can be frustrating to just hear, no, this doesn't do it for me. And then we're not sure as to why. Maybe there's a solution there, but I think ultimately you're just trying to say, hey, do we have general agreement here that it's worth us spending more time on this together?
Completely agree. And I think that there are some calls that I've had, an initial phone call with somebody, and I can tell that they've gone through the paces before. Mm-hmm. And I think one of the things I admire about business owners in general is you generally end up being a very direct person, and that works really well because I tend to be as well. And those first calls, though, if you've been through the paces, there's folks who have said, listen, what's your price? Or here's my price. And it almost gets a head start on an IOI stage because here's my expectations, and I can totally respect your expectations because it doesn't always boil down to here's the standard multiple that's being paid in an industry. It could be as simple as, if I sell it for $10 million, I know that after tax, I'm going to get Y, and that works for me, or it doesn't. And so that's okay. And the beauty of a conversation as frank as that one, or that's sussed out in an IOI stage, is that it sets everybody's expectations. And I will say, even right now, I've had tremendous conversations with folks a couple of years ago when I just started, and I'm circling back now and saying, hey, how are things going? And it's made the conversations even more productive today because we knew we were on the same footing and we didn't chew up a ton of time and then walk away. I do not want to leave somebody at the altar. And to your point, I don't think you want to be left at the altar either, because it is a long road. And if it's not today, it could come later.
Yeah, I have probably more examples than not a lot, but more than one is more than I care for. Businesses and business owners that I thought were going to be the one, and punted on an IOI discussion in favor of building momentum, excitement, and thinking, you know what, I'll be able to provide a fair offer to them later. And 100% of the time, it has not worked out. And that, it's a good lesson. It's a painful lesson. It's one I wish if I could rewind the tape, I went back and just, one thing we haven't talked about is what's the timing of all this, right?
Sure.
You can give someone, as a seller, if you have access to the right information, like financial data that I mentioned, you can give someone those valuation expectations within 24 hours. I mean, think about that as a business owner, right? Like, your time is incredibly valuable. And we know that we are not the only ones probably showing interest in your business. So to be able to save that much time from first phone call to setting general price expectations and then saying, let's keep going, or, hey, not for us, we're going to pass. It allows you to go focus on other things. I mean, typically what I've seen is it can take probably up to a week to kind of get there, just given hey, as a business owner, you're running a business day to day. I get that, right? You got to maybe go find the right person to pull the information. But I think as soon as the buyer has what they need, they owe it to you as the business owner to get that information back to you in as quick of a time frame as possible. And if they're not, what I would say to a business owner is, like, put this buyer's feet to the fire a little bit. Be like, what else do you need to know from me? Like, I'm available for, to answer questions. But this is, again, we're having open communication about assumptions and questions is really important throughout all this.
I agree. And it strikes me that it's worthwhile sharing kind of what happens behind the scenes as well. Your and my structures are very, very similar, if not identical. And although we have different investors and some overlap in terms of the folks who are supporting us, however, there are sort of bookends to what's possible. And I said this morning, it's, there are things there are valuation expectations that are kind of set in stone based upon the obligations that we have to our group. And we're going to work within those bounds. So it's not it's neither here nor there. If we can get there, great. If we can't, we won't. And I will say as well is that, and we've spoken about this in other sort of episodes, but there's a tremendous amount of knowledge that we can lean on and get smart on. And we could be deeply sort of embedded in an industry and understand it and be very thoughtful without engaging someone. But we also have some folks that are at the other end of a phone line that can help us work through some of the nuance of your situation that we might pry about, but it'll help us come back with a fair number, at least in our eyes, and kind of help you get to the next stage, whether it's a go or a no-go. Mm-hmm. And I think it's fair as well, as part of that process, just to add, is your, business owners should feel totally comfortable. And I don't think that anybody needs permission, I'm saying, but I would encourage any business owner who's looking to sell to ask those questions. What is your process like at this point? How much engagement do you need in order to move ahead? And let me know, because it's, again, it boils down to, your time, and somebody who's a qualified buyer should be able to answer those questions quickly and easily.
Yeah. Yeah. I think your point about there are always, I'm going to use a consulting word I thought I left long ago, but there are always other stakeholders involved, particularly on our side. For you and me, Kirk, right, having, a team of investors who are eager to, finance the right transaction, they need to be as comfortable about the opportunity as ourselves and a potential seller is. Even if it's an individual buyer, I mean, they're going to probably go to a bank, and the bank's going to want to have similar questions about, hey, tell me more about this company that you found. Why are you excited? I mean, they have a totally different sort of risk profile involved, but I think that that's also, as you said, it's on encourage owners, business owners, and buyers to get clarity on the process and the whys behind this, but also understand that as for us as the buyers of the business, that our questions are coming not just from a place of general curiosity or to spin your wheels. I mean, I'm naturally curious. I could ask stuff all day, but it's really around like, hey, how do I make sure that I'm understanding as much as I can about the business to put a fair offer that I think can close, that solves some of the goals that as the owner of the business has in pursuing this.
100%. Assuming we've kind of beaten this one to death here, I'd like to kind of jump ahead to kind of what we called the sort of early diligence stage, sort of second date, to using a dating analogy. Can you kind of set the scene for us here, if you don't mind?
I think this is between a IOI or an IOI type of conversation and having the, alignment between a buyer and seller about, hey, okay, I think generally we're in the right ballpark on price. I'm so excited about this. I'm choking up, Kirk. Into an LOI, which we're going to get to, but it's a little bit more of a formalized document because we'll have a lot of these details buttoned up about the potential offer. This space, the second date or the now we're in dating mode, it can go a lot of different ways. But I think, as you said earlier, giving folks a peek into like our process or the things that we, I guess, care about can help set a better timeline, prioritize the right information, make sure we're using folks' time wisely, all that stuff. So what we're trying to do from the point of, hey, the IOI is interesting, like what else do you need to know, and getting the letter of intent in front of you, is to understand. What I try to tell folks is there's probably 3 to 5 things about your particular company based on what you do, your industry, you as the seller, that I would like to better understand and that my team would like to better understand, so that we can get more precision on the IOI. Ideally, what you're not going to do is, if your IOI is here around price, you're going to go all the way over here, all the way over here. There might be some change, and it will be grounded in the facts and conclusions that you're drawing. What's dangerous about this sort of time is that there are 1,000,001 questions you can ask. Okay. And as the more that we've been at this, I think we realize that, sure, there's going to be 1,000,001 questions to ask later too. So let's just pick the right ones to ask now. So this is really, how do we prioritize the right information to gather? I think the other thing that this period is really important for is on the seller side. I think they need to think a lot, spend some time really thinking about, if I am really to sell, because this feels a little bit more serious, what do I really care about for myself and for the business? And that's going to be really important when it comes to actually preparing the offer, because it factors into the structure, but it might also help you as an owner of the business or the seller of the business start to ask questions back to the buyers, you and me, about how we might think about running the company, how we think about their people, their customers, or their ongoing operating philosophy here. We totally get it. For many situations, the company is like another child to the owner. Yeah. It is their thing that they've conceived, brought in the world, built, and they're incredibly proud of it. And I always tell folks this all the time, like, I'm trying to do what they are doing right now, right? Yeah. By acquiring their business or purchasing their business. But we're interviewing each other. So just as we're interviewing them, they're interviewing us. And this whole thing about us trying to understand more about the business and the owner, and the owner trying to understand more about us, becomes a bit of a feedback loop, right? And it will inform the questions we ask one another, but I think also say, is this the right relationship that we're building? So I think that's where this whole time period is really important and critical. A lot of it's going to be on us, but I would also sort of challenge an owner to think critically about this, because we want to make sure that we're the right fit for them, but also we want to answer all the questions that they have. So
I thought I'd add one thing, and that's that it can feel awkward sometimes when somebody is prioritizing getting data before the relationship. And we can beat this horse to death, but I think just be mindful that it's with an end goal in mind. My lens for a P&L or a balance sheet is that it's a distillation of all sorts of stuff. And it is going to allow somebody in my position to think through, how do you think about your business? How do you think about each of your revenue lines? How do you account for it? And then into more granular stuff, like how are you staffing in a thoughtful way? And how does that impact the margins of your business on a go forward basis? But then I think it really guides these operational questions that can be part of this sort of like second stage where you're getting to know each other better. And in a lot of cases, like I'm very open about who I am and what I've done and where I go, but I also believe and want to believe that the types of questions that I'm going to ask you through this process are a leading indicator of who I am and how I think about your business and how thoughtful I am about what my life is going to be and the challenges that I'm going to adopt when I step in and run your company. And so I love getting a P&L because it always stimulates some thought. And I end up like you, I kind of have to say, this is a priority. Let's focus on this. And then this is a, second, third stage kind of question that I can ask. And I'll turn it back over to you. I think like you were going to dive into a few things and I'll riff on that.
Yeah. I think I'm with you. Every sort of piece of data or info will sort of get the gears turning around what some more follow-ups here. I think, as you said, we're trying to better understand the challenges, the risks, not meaning that in a bad way. There's always, nothing is perfect, right? And that's okay. So I think it's just understanding what are the strengths and opportunities of any potential business that we might be lucky enough to buy. So I wrote down a few things that I have typically dug into or try to prioritize sort of in this stage. So one is an on-site visit. I realize in the age of COVID, that has been more difficult. I'm based in New Jersey, so for some businesses that are drivable, I've still been able to go and meet people, at least in their offices, even if, a lot of folks are services-based businesses, there's not a huge plant involved or anything like that. But I think that is a really important step if you haven't been able to meet someone in person, but just see where does this business really hum and operate? What's the vibe like, for lack of a better word? How are people working within this space? I can remember I actually visited a business, this was 2 years ago. They helped fabricate like exhibits for trade shows and sort of within that realm. They had a whole section of their facility dedicated to actually building stuff. And I was like a kid in a candy store. I'm like, this is so cool, right? And I'm thinking the business actually had a lot of interesting things in it from the financials, but not being able to see kind of how everything got made. I mean, you walk out of there and you're like, man, this gets me excited. This is where I could see myself spending a lot of time. So the on-site visit's really important. I think just you always want to be able to find an opportunity to do in-persons. Zooms are an okay substitute. I realize that they're very common nowadays. So if that's the most appropriate, absolutely do that. So I think that's one. I think talking in more detail about the owner's role after the sale, which I think kind of gets back a little bit to, putting it to a business owner to really think a little bit critically about what do they want to accomplish here. It's going to depend on the owner. Older owners that you and I have spoken to often are looking for ways to retire. We've talked to younger owners who are no older than us, who want to sell, who really don't want to leave the business. They want to stay on. Really determining if you were to stay involved, for how long and what capacity. If not, how long would the transition really be? How interested are you in terms of, hey, do you want to be paid a consulting wage? Are you doing this out of the goodness of your heart? All of these things are important at this stage to really just understand a little bit more, because it's never just, hey, the deal is closed, here are the keys to the office and you'll never see me again. I actually think that's a huge red flag.
Yes.
To have an owner who is just not interested in engaging with the new buyer. So I think on-site visit or in-person visit, really discussing the seller's role after the sale. Getting some more detailed financial information. So outside the P&Ls, I think, as you said, there's balance sheet information, and maybe there's longer 5 years of sales data. At this point, having also customer level data, I think is important. Again, it can be anonymized. Ideally, for the past several years, just seeing the trends and understanding who the customers really are, what industries do they come from. You already touched on this. I think a narrative that we can comfortably relay to others around the historical performance of the business, right? Everything ebbs and flows in different ways. I think at this point, I'm alarmed pretty much by nothing. I just want to ask the right questions and say, hey, maybe a year ago, it was not as strong as your forecast. Like, what happened? Or 2 years ago, it was way better. Let's just talk a little bit more about that. product demonstration. So especially if you're a software-based business, sounds sort of obvious, but like, maybe you're just talking so much high level about a transaction, like book a demo, do it for an hour. I'm a huge visual learner. It's very hard, not impossible, but it's seeing how things flow. I used to do those demos, and it made my life a heck of a lot easier explaining just what it is we did as a company and the value we brought to our customers. And I think the last thing I wrote down here was just the organizational chart, census, who does what departments, who's a full-time employee, who's a 1099. Do you use any sort of freelance or agency work? Very common for smaller software businesses. It is more cost efficient to hire someone onshore an agency or offshore an agency than to hire a team of developers. Just better understanding kind of who reports into what, ultimately kind of what headcount or resources are put against each of the functions of the business. There's, again, a ton more, but I won't go all into it. I'd say the last thing too is it's going to be industry and company dependent. The questions, Kirk, you and I ask about a software-based business are going to be totally different for a HVAC business or a business that sells in the healthcare space versus the commercial property management space, right? So some of this is going to be tweaked in that way, but I'd say those are the kind of common ones I can think of. I don't know if you have others to add there.
On that spectrum of traditional services through to pure software, I think there's probably two really big and important questions that I tend to ask looking at those, and anybody should be prepared to sort of open the kimono, as they say, and looking at, say, very traditional businesses, heating and ventilation companies, right? You might be a pure installation business or a service business. You have some challenges around staffing, because I think it's no secret that most mechanical technical industries are finding staffing tough. I will ask the question, well, how old is the team? How old is your service manager? How old is your installation manager or your COO? And the longevity is valuable as well as youthfulness, because the team is so important to this process. And I learned that personally through a friend of mine's dad who ran a very sizable HVAC business, and that was his number one thing for me. And I will ask that early on. Having spent some time in technology development, I will also ask very early on, and I've learned this the hard way, and we have a mutual friend who also learned this the hard way, is to talk about the state of the technology upfront. If you have architectural diagrams that outline how you've built the software, if you have tech debt, and or have invested heavily in legacy frameworks, and if I'm getting too far away here or too in the weeds, let me know. But the point being is that if you can go all the way down the road, and then somebody who is not necessarily a technology expert is going to bring in the qualified person to do a deep dive on your tech. Unfortunately, you could churn and burn a lot of time and energy before you discover that. So front load those conversations in a software environment, especially if you're a business owner whose time is valuable. And that's all I have to say about sort of those two sort of ends of the spectrum. Jordan, let's maybe talk about how long somebody can expect to spend on this sort of phase of the process.
Yeah. I mean, ideally, it's probably a few weeks. We realize that, talking through this a bit more, we realize we are asking for a decent amount of information and also time, particularly if there's an in-person or an on-site. So I think the expectation it could be, 2, 3, maybe 4 weeks. I think as buyers, we ought to be, as responsive and as flexible with our calendars as possible. But we also understand that if it just, hey, we've got to wait a couple weeks to have calendars free up, totally fine. But I think that's fairly typical, is to have this period be at least 2 weeks, if not longer. I think if this is taking, my advice would be, if you're a business owner and this is taking months and months and months, and the buyer is constantly asking for follow-up data, I would be a little concerned, because it's like, what else do they really need to know to prepare an offer here? Like, what else are they trying to find out? So I would almost encourage you to ask that question of a buyer if they are if this is a multi-month process and you have had no clarity on whether or not an offer is actually coming through.
100%. I would add as well is that there's an old saying, and that's that time kills deals. And that momentum is very, very important. And I think it goes two ways, right? I know that the litmus test for me about when I want to buy a business is that I'm excited about it and I'm following up on it. I'm having engaging conversations. Not often enough is there follow-up from the seller side of things. And I think, and I've having seen this with some folks who I'm very close to, sometimes it's just pride, right? You want to know that the other person is excited about you, but you don't want to show that you're excited to sell your business. And it's okay to be looking forward to the next season of your life. And so I granted this is coming from me, but I would encourage anybody that if they do enjoy the conversation, they feel like it's headed in the right direction, don't be afraid to circle back and push for the next stage, because everybody wants to be loved, and it can help you kind of get to where you need to go. Very similar to the sort of the dating analogies that we talk about. So my final thought on that one.
Sure.